can the broader market hold up if technology is no longer in a leadership position?
I think you actually summed it up very nicely when you said hold up. That as we look at the market and we see kind of a rotation away from those leadership areas in tech, particularly FANG and similar names, movement towards financials, movement towards energy, kind of a growth to value rotation, very, very much the way we thought markets would play out this year. In an environment in rising rates, bond yields moving higher, this is very typical. What's almost been atypical has been the last few months where you've kind of had those tech names kind of hovering at new highs. That's the unusual or the anomalous kind of environment. So this is kind of what we thought would play out, and it is playing out.
Brian, you got Facebook down another 3.5% today. Obviously, we saw Twitter take it on the chin and Intel last week as well. Apple earnings tomorrow. How does this move forward, especially if Apple, for example, disappoints the street?
Well, good morning. We would say that so many investors are looking for that quote-unquote canary in the coal mine with respect to what to do with their FANG positions. As Tobias talked about, as many strategists, and ourselves included, thought this was going to be more of a value market because, quite frankly, the fundamental attributes of the United States stock market are screaming value. But it seems like everybody's so focused and concentrated with respect to what they're thinking and saying about FANG. From an investment strategy standpoint, we're less worried about Apple because of where cash flow is and where dividend growth is. And we still love Alphabet because of where cash flow and dividends and growth are there as well. Facebook has had its issues, had the shot across the ball with respect to the congressional hearings, and I think a lot of investors have been scaling out of Facebook for a while.